Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For Elliott Wave Trading, our website is www.24elliottwaves.com. For general trading, www.stochastic-macd.com. For advanced trading, www.dayprotraders.com. The title of this video is Complex Elliott Wave Day Trader. Complex Elliott Wave Day Trader. Our goal is to simplify the wave trading without diluting it. All right. Yesterday, I recorded a video that I call How to Play the wave principal game. In that video, I was looking at the dollar yen on the 15-minute chart, and we see a complex Elliott wave. All right. Now we know that according to the wave principle, the impulsive waves can be divided into 5 minor wave. All right. Generally speaking. All right. And the corrective wave, generally speaking, can be divided into 3 waves. But sometimes we have a complex Elliott waves, complex corrections, which means, all right, in a simpler way, is that a correction will take place. People will think that the correction has ended, but then we'll have another move, which means a failure of an impulsive move. So what we are talking about, suppose we have, for instance, a zigzag pattern, okay, and all right, we have a zigzag pattern. Price display 1 2 3 4 5 1 2 3 1 2 3 4 5. So we have a zigzag pattern. Okay, A B C. The first part being divided into 5 waves, second part in 3 waves, third part into 5 minor waves. So at this point, trader very often may think that the correction has ended. And then there will be a move like this, okay? Another move like this, which means this is a failure of an impulsive move. Instead of having a new impulsive move at the end of a correction, we have a failure of an impulsive move. This is what we usually call X. And then we have another zigzag pattern following this, okay? All right? And again, ABC. All right. So you see now ABC, X, ABC. But what is taking place is that when traders see the first correction, they think that, okay, now a new impulsive wave has begun, but the impulsive wave has failed. This is what we call X. And then we have another correction taking place. The correction may take place, okay, many times. We can have a double zigzag, triple zigzag. But the point I want you to understand, if you are using the Elliott wave, you must work with what we call the market stable data. All right. Now, in all our video, you'll notice that I said this 100 times because it's too important. You cannot achieve consistent winning trade. You cannot make consistent, accurate decisions in this messy market, okay, without applying the market patterns. I'm going to share with you today again another market stable data. It's very simple. The price always moves from one key level to the next key level. Always, always, always. The price is if the price is going down, the price is looking for a better support level. So it will move from one support level to the next support level. It doesn't matter whether you're on a 3-minute chart, hourly chart, okay, every time frame, this principle is true. The price is always moving from one key level to the next key level. It can be a key level on a 3-minute chart, it can be a key level on the hourly chart, weekly chart, monthly chart, yearly chart. This is true. And sometimes, for impulsive wave, you will see that the price will display 1, 2, 3, 4, 5 waves, okay, from one key level to the next key level. So we can incorporate the support and the resistance in our wave counts, knowing this market stable data that the price of all financial instruments or financial securities always move from one level to the next level. In the uptrend, the price will move from one, okay, resistance level to the next resistance level. So if, for instance, you see here, price move 1, 2, 3, 4, 5 to the next level. Now, if the price fails to find a support here, we may see a kind of, okay, price may try to go up, acknowledging, okay, the support level, which will form a kind of, okay, a corrective wave here. And then because the trend is not finished yet, we may see another move, 1, 2, 3, 4, 5 to the next, okay, key level. Moment, please. I need to pause the video because of the noise in the background here. So stay with me as I'm going to pause the video. I'll be back in a minute. Thank you. All right. So the price always moves from one key level to the next key level. And sometime, the same thing will happen sometime when the price is correcting an impulsive wave. We may see a correction taking place. You may recognize an earlier wave, a wave pattern, and you think that the correction has finished. A new impulsive wave will start, but that impulsive wave will fail. That's what we call X, and following by another correction taking place. And we may have a double zigzag, a triple zigzag, all right, and all sort of complication taking place, which means you see the pattern, you think that has ended, okay, the pattern is completed, and, okay, a new impulsive wave has begun, but because the impulsive wave has failed, and the correction will continue again, all right? This is what we call a complex wave. Now, talking about the complex wave, we can talk about the complex impulsive wave that are divided into 5 waves, generally speaking, and also the complex corrective wave, generally speaking, divided into 3, but there are different types of corrective waves, all right? So now, on this 50-minute chart yesterday, when I was recording a video that I titled How to Play the Wave Principle Game, all right? I have counted the wave on this 50-minute chart for the dollar yen, okay? And at that point in time, we were expecting this pair, currency pair, to start a new impulsive wave. Now look here, I don't want to go too deeply into it. You can see here, I count it, okay? Let's zoom into it a little bit so you can see clearly on your chart, okay? All right, much better now, okay? So this is the line I still have on my chart. This is first wave, second wave, okay? The second wave is the orange line, third wave, okay? Fourth wave, okay? And a fifth wave. And then here, you see the green line, that when I draw it here. And then there was this move up, okay? This move up, which is a correction up, following by this move down. So we were expecting the price, okay, to go up, okay, to complete the correction into a flat correction, 1, 2, 3, 4, 5. You can see here I have 1, 2, 3, 4, 5, all right? Correcting this move down. But you can see that the trend is not finished yet, okay? The trend was not finished. So at this point in time, we can 1, 2, 3, 4, 5, followed by a new correction that has started, okay? 1, 2, 3, 4, 5. So this is 1, 2, 3, 4, 5. All right? So we were expecting a flat correction. The flat correction has started here. We were expecting the flat correction to end somewhere here to correct this move here. All right? But the correction has failed. The correction was not completed. Why? Because the trend is still underway. Do you understand? So what is taking place here? We see 1, 2, 3, all right, 4. My apologies to the traders. There are some work taking place in this area here, so there's nothing I can do about it. Okay, so we have 1, 2, 3, 4, 5, and we were expecting a kind of a flat correction that has started. Okay, but the correction was uncompleted. Okay, because the trend was strong, we did not have, okay, the last part of the flat correction. If I color this section here, you will understand what I'm saying. Pay attention carefully. Do not get confused. All right. So there was a 1, 2, 3, 4, 5 waves. A correction has begun, but because the trend is still in place, the correction was not completed. And the trend, okay, has resumed again today. And I'm going to show you here on this chart what is taking place. All right. So 1, 2, 3, 4, 5. A correction has begun. 1, 2, 3. But the third part of the correction was uncompleted because the trend has resumed. As you can see here, 1, 2, 3, 4, 5. A correction has started here. 1, 2, 3. But the third part of the correction was uncompleted. As you can see on my chart, we were expecting, okay, the correction to push the price up to this point somewhere here. But it did not take place. Instead, okay, the trend has resumed again. This is a complex, okay, wave, a trading. So where are we now? So we know that this session here, if I color it now into red so you can see it and understand what I'm talking about, okay, color it to red now. Now, I will not color this one into red because why? Yesterday, when we were here, we were thinking that the correction will continue all the way up here to form the 5, okay, wave up, okay, but it did not. So now what we have, you can see that the correction was not completed, okay. So the trend has resumed again here. Pay attention. It start again here. The trend has resumed again. Again, we have first wave, second wave. All right. No, not there. No, my apology to traders. My apology to traders. The trend has resumed here, right here. The first wave, right here. First wave. So if I adjust my lines carefully, you'll see. I'm going to adjust it a little bit so you can see it on the chart. Okay, so this one is still red. This one also still red. You have to understand that the red lines are the corrective session of the flat correction that was uncompleted. You see, we were expecting to continue to go up, but it didn't. Now, because you see the correction has failed at this point here, right here, it has failed, and we have a new move to the downside. Straight away here, you see. So this is a second wave, all right, and a third wave, and right here, okay, the fourth wave. In fact, yes, that's correct. Right here, it's a bit messy here. All right, down to this point here, right here. So 1, 2, 3, 4, 5 move down. So this is a complex Elliott wave. We have 1, 2, 3, 4, 5. A correction has begun. Pay attention to the red lines. The correction was uncompleted because it couldn't continue to display the 5 wave. Then the trend that has started here, okay, has resumed again right here. 1, 2, 3, 4, 5. This is a complex Elliott wave. The reason why sometimes we have a complex Elliott wave is when, okay, a key level is rejected. At this point in time, we were expecting that this is a support zone because we see 1, 2, 3, 4, 5 wave move down, followed by a correction that is taking place. We are thinking that this zone is a support zone. But because this support level has failed, the price continues to move to the downside, looking for the better support level. If we go, for instance, to the daily chart, you'll see what is taking place there. In fact, last weekend, I posted on our Facebook page and also on our Google Plus page a very beautiful, okay, a slow stochastic pattern right here. And I was telling trader that this pair has a high chance to go down. And this is what has happened this week. Today is Friday, the 8th of August 2014, and the time in London is 2 minutes past 10. It's now 3 minutes past 10 a.m. in London, and that's 3 minutes past 5 a.m. in New York. August 14 on the 8th. So this is this week. So this is Friday. Okay, candle. This is all right. Friday, Thursday, Wednesday. Okay. Tuesday, and Monday. All right. So you can see that the price is going down, but this move, okay, down is also divided into 5 waves. All right. But I don't want to go too deeply into this. We can go and play with it. Let's see on the 2-hour chart whether we will see everything clearly here. Yes, it's a correction taking place. You can see the price was bullish first, followed by, okay, so this is looks to me like a flat correction taking place here. Price going down in a 5 move. All right. First move down. If you want, we can do it now. This section here, this is a double retracement for traders who understand the flat correction. I will refer traders back to our website. It's a double retracement taking place here, followed by, okay, the last part of the flat correction, which is divided into 5 Elliott waves. Okay, so first move, second move, all the way up here, and a fourth move. Oh no, this is the third one, and okay, too many lines. My apologies to traders. And the fourth move, followed by the 5th move. We are now in the 5th move. So if you have been selling the crazy currency pair, the dollar yen this week, it's time to take profit because Friday. It's time to take profit. The correction, okay, is now ending here. Now, what is taking place now? Trader will draw a support level, all right, right here. If this support level fell, so what is likely to take place now is, okay, the price trying to start, okay, an impulsive move because this is a correction here. So you see here, it was a double retracement here. Price was bullish first. We have a double retracement here, and it come down 1, 2, 3, 4, 5. Great. So the price will attempt, because the price now at a support level, the price will attempt, okay, to go up to form, okay, a kind of X or a kind of impulsive wave. But if the impulsive wave has failed, we will label it at X. All right? If this trend that has started here has failed, if the trend that has started here, okay, is still strong, we may have a kind of X, and the price will continue to go down. And this is what we call a complex Elliott wave. If you go to the weekly chart, you will see the support level. Where are we now? Okay, because the price was consolidating here. You see here the market pattern is now on the lower part of the market, on the lower part of the horizontal channel. But there is still a support here. There is another support here at 10132. If the support level where we are now has failed, the price will seek the next support level. But you can see that what I was telling you at the beginning of this video, the market stable data, from this key level here, the price went to the next key level where we are now. If I color it now into green, pay attention carefully to what I'm saying here. The price always moving from one key level to the next key level. And sometimes it's easy to determine, okay, the internal wave if one is also paying attention to this market stable data that the price moving from one key level to the next key level. What the price has done this week, from the red horizontal line to the green line, the price has moved in 5 waves on the daily chart. Now, the next thing that will make it a bit complex, if that support fell, the price will seek the next support level below, which is in the zone of 101, okay, call it 30, all right? So there is another support here, but so far we have seen, okay, 5 move down, all right? If this green support level has failed, at this point in time, the price will acknowledge this support level, trying to go up a bit, but if the bearish momentum is very strong, the price, after the price is starting a new, attempt to go up, that will fail. That's what we call a rally. We can call it X, and the price will push it back down again. This is what we talk about. This is what we call a complex Elliott wave. All right. I'm going to go back now to the daily chart, and you will see. Hopefully, you see the red line. In fact, I went a little bit. I was a bit too conservative. You can see. Well, in fact, it was more than that. The thing has started right here. All right. So from one key level to the next key level, all right, the price it has displayed 5 move down. 1, 2, okay. 1, 2, 3, 4, 5. So from the red line, the top one here, to the green line, it was a 5 move to the next key level. The price will attempt to try to recover here, to try to go up a little bit. If okay, the reverse does not take place here, the price will come back down. What the price will look for now, the price will now move from the green line to the pink line. It's happening all the time. And trader must pay attention to it. And that's why sometimes we have a complex Elliott wave. Sometimes for a corrective wave, you see that the price will be confined between two trend lines. You see the blue trend line here. So a correction may take place, and okay, the price may try to go up, okay, but if the impulsive wave has failed, the price will continue to correct itself again. That's what we call a double retracement, a double correction. A triple correction may take place, sometimes even a 4-time correction when the price is correcting itself. So there was an impulsive move, the price reached a support level or a resistance level in the uptrend. Price tried to continue the trend, but if the trend has failed, another correction will take place, and so on, making the wave count a bit complicated. But to simplify the complex Elliott wave, traders must use, okay, the key levels and also the trend line. Because if you draw your key level, as you have seen now, the price move from the red line to the green line. We know. Now, if it's going to go up again, now try to go up, we need to acknowledge the resistance. Because if the price is going up, the price is looking for a better resistance level. So you may see, for instance, you may count 1, 2, 3. All right? Because if the momentum is weak, which momentum is weak? The momentum may be weak. A bullish momentum will be weak in a downtrend, all right? And a bearish momentum will be weak in an up move, all right? So, as the price tries to rally up, we want to know where are the resistance levels, all right? So, when we count 1, 2, 3, or we see a flat correction developing, we want to, after a downtrend, we want to know where are the resistance levels. And you will be amazed how the price will move again from one key level to the next key level. By using the key level, trader will be able to simplify the complex Elliott wave. So you see here that the price moves from the red line to the green line. Now we map it now. Next move, where are the resistance levels? The price trying to go up now. Now we want to know where are the resistance levels. They are here. The closing price here. Okay, these levels here, we can pay attention to them or switch to, for instance, okay, zoom into it on the hourly chart. Okay, so where are the resistance levels on the hourly chart? There's one here. Okay, if it start going up like this is a resistance level. There's another one here. Just put them there and draw, just highlight, label your waves, and you will see clearly what is taking place, okay, beneath it. Though it looks complex, there's nothing complicated about it, because if you work with the key levels, we'll be able to piece everything together. So instead of looking at it as a whole, we can break it down piece by piece, working with the market patterns and okay, the key levels. All right. I'm going to go back now to the 15-minute chart, and I hope you learn something from this, and we put it to use, okay, to make excellent day trading and swing trading decisions. So here we are. We have seen the 5 move down again. We know that the red session, this is a failure of a flat correction. The trend has resumed again, and we have 5 move down. All right? It makes sense? So now we are at the green line, you know. This is a support level on a weekly chart. My apology to trader for the noise in the background. A lot of building work taking place in this area here. So my apology to traders, okay? So the price now on the 50-minute chart is trying to go up now. So here we are again. We can start again drawing lines. So what the price has done now, you see, on the 50-minute chart, we can again pay attention to the key levels. As I told you, this is a market stable data that is valid on all time frame. So now, on this 50-minute chart, you can see that the price went up like this. Okay. And pull back a little bit. I need to stop the video now because the noise is a bit too much for myself. So here, 1, 2, 3. So what the price has done from this support zone, it went to this key level on a 50-minute chart. Yes or no? All right. If this move will continue, and we will have, if we need to have an impulsive move, the price must come down as it's pulling back like this. It must break above, okay, this key level on a 5-minute chart. If it's stuck below this key level, it means that this move 1, 2, 3 is a correction again, and then the price may resume the downtrend, and we may have again another move to the downside, crossing below the green line, and then we are heading towards the pink line again. So on any time frame, we can use the key levels on the 50-minute chart, on the hourly chart, on the 4-hour chart, on the daily chart, on the weekly chart, on the monthly chart, when we are counting wave, in order to simplify the complex area wave, breaking it down piece by piece from one key level. What did the price, okay, do? All right. You want to know the price will form a pattern, okay, from between two key levels always. So either we have an impulsive move, 1, 2, 3, 4, 5, from one key level to the next key level, followed by another correction from one key level to another key level. It's happening all the time. If I want to simplify everything, what I'm going to do now, I'm going to remove some of my line, and we're going to highlight some key level, how the price did behave for this complex wave count. Remember, the price is always moving from one key level to the next key level. Once again, I want to apologize to traders for the noise in the background because of some building work taking place here. All right, it's not very helpful to myself, but there's nothing I can do about it. Okay, when you are recording video and all this noise in the background, it's not very helpful. All right, so here we are. So hold on a second. I'm removing some lines so that everything is clear for us. Okay. All right. So the last move here. What I'm going to do now. All right. So the green line you see here, I'm going to put a line there. I'm going to remove this one. And I want to show you how the price moves from one key level to the next key level. Now I'm removing all my lines and to free my chart so we can all see everything. All right. I'm going to remove this one also. It's a failure of a flat correction. That's it. So now, here we are. I'm going to remove these two. Okay. So we have a 5 move. In fact, up to this point here. 1, 2, 3, 4, 5. Let's color it into orange. Okay. So from the red line to the orange line, the price has moved in 5 moves. 1, 2, 3, 4, 5. Okay. And then we have the correction here. 1, 2, 3, blah, blah, blah. Okay. From the orange line, we have now, because of the failure of this corrective move, this flat correction, we can see that the price went down again in 5 moves, which are highlighted again by the green spot. You see the green spot. All right. We want you to understand that. Here, instead here, that's where I need to put my green spot. And I need to remove this one here. So 5 moves from the green spot to this green spot, from the red line to the orange line. Okay. Now we have another 5 move down. 1, 2, 3, 4, 5. And I need to put another green spot there. Because I want you to understand this clearly. Okay? Just put it there. And I'm going to draw another line there again. And this time I'll color it into green. Okay? Pay attention carefully. Now you see clearly the market stable data, how the price is behaving. So now from the red line, the price this way 1, 2, 3, 4, 5. And then we have a bit of correction which has failed. And then from this, you see where so the price moved down from a key level to the next key level. When the price reaches the next key level, there was a kind of correction that has begun, but the correction was not completed. Then from the orange key level, the price went down again, 1, 2, 3, 4, 5 to the green line. Now, we're on a 50-minute chart. You may say to me, George, this is on 50-minute chart. Let's go now to the daily chart and see whether these lines represent some key levels. So you can see the line that I draw, is the red line, the orange line, and the green line. Let's remove this line that I have on my daily chart so you can see everything clearly. You need to discount this green spot. These are from the daily chart. These are not from the, remember we are here. We are somewhere here, okay? Everything that I've drawn on my 50-minute chart is here, in this section here, all right? I want to remove the support level that is below the green line. I'll remove it. So everything that we have drawn on a 50-minute chart, here it is, the key levels. Remember, the red line is what? It's a resistance. Can you see it? It's a resistance. Look here. Can you see it? It's a resistance. You see? Right, change the direction here. Went up to it. This zone. It's a zone. And then change the direction, went down. Here it is, come down again. So resistance went down. It's a resistance. Yes or no? Resistance. So the red line that I draw on the 50-minute chart is a resistance, okay, on the daily chart. Let's pay attention now to the orange line, okay? The orange line, look what the price has done, okay? There was a consolidation. Whenever you see a consolidation, acknowledge it. It's a very important level. The price consolidates, okay, on the daily chart. You see here, on the daily chart, all this is a consolidation section, telling that this is a very important level, okay? And again, here was a resistance, price went down, price dipped below the orange line and retested here and went down. So it was again a resistance here. Here, again, a resistance line. So from this resistance level, price drop it down. All right? So, but remember, the price started to move here, which means this is a resistance level. Price going down, the price looking for a support level. This support level is the orange line, which is a key level on the daily chart. That orange line has failed. The price is looking for the next key level, which is the green line. Look, what is the green line? Look. You see, it's a support level. Yes or no? It's a support level here. Price changing direction here. Price changing direction here. Price changing direction here. Price changing direction here. You see, it's a support level. So the stable data that stated that the price is always moving from one key level to the next key level is true on all time frame. In 1 minute time, on a 10-second time frame, on every time frame. But if we incorporate the wave count, we can see sometime that one can count 5 waves between the key levels, followed by a correction. Or one may see a correction from one key level to the next key level. All right? If I go now to the weekly chart, we want to see this level. Again, on the weekly chart, your red line, you see, is a resistance level. See, price went up, down, same thing, key levels. And the orange line, you see, again, the price consolidates here on the weekly chart. The same thing we see. These are key level. And there's a support here, okay? The lower part of the channel. And it's a support level again. And this is what has happened. Now, let's go back again. We haven't finished with the complex, okay, wave counts, okay? Hold on a second. I need to pause the video again, and I will come back to you in a minute because I need to do something. I'll be back in a minute. Thank you, traders. Let's continue. Okay, so I'm going to go back now. What we're going to do, because we see now the price moving from one key level to the next key level, and we may recognize an Elliott wave pattern between two key levels. All right, same thing for the corrective waves. I'm going to go now again to the 15-minute chart. Okay, this time what I'm going to do, I'm going to highlight the section of the correction. You can see that in fact the correction that is taking place around a key level. As you can see here, the flat correction that I have started here was just around, okay, the key level. So the price moved down from this resistance level, the red line, to the support level, and the price tried to consolidate around. There is a correction taking place around that support level. That's why I'm saying to you now that the price now at this support level, there's a high chance that we may see another corrective pattern. This is about, okay, a complex Elliott wave trader. I hope you have learned something from this video also, and we put into use, okay, to make excellent trading decision. The price always moving from one key level to the next key level, and between between two key levels, we can recognize an Elliott wave pattern. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. If you like this video, please give us the thumbs up. If you dislike it, okay, give us the thumbs down. And if you truly like it, share it and subscribe to our YouTube channel. Thank you for watching.